What's up guys, welcome back to the channel. This is going to be another quick one. So in this video I will talk about buy side and sell side liquidity. A lot of people are struggling to understand buy side and sell side liquidity, so I'm going to explain it in today's video. So if you're new to the channel, consider subscribing to the channel and be part of this family. Okay, this is a very big family and it's growing daily, so be part of this family. Let's jump straight into it. Buy side and sell side liquidity. I'm going to show you how to identify buy side and sell side liquidity. So what is a sell side liquidity? Sell side liquidity is resting under net swing lows. Okay, sell side liquidity, it rests under swing lows, and buy side liquidity is resting above swing highs. Buy side liquidity rests above swing highs. So this is a swing low and this is a swing high. So when you have a candle at the lowest low, the lowest candle at the middle, and we have this higher low at the left and we have a higher low at the right, okay, so this is your swing low. Anyone that is going long from here, their stop loss will be placed at this low. So this is your swing low. We have this middle candle, which is the lowest candle, the candle that has the lowest wick, and you have another candle at the right which is a higher low, and another candle at the left which is a higher low. Okay, these are higher lows, but over here we have the candle with the lowest low. This is your swing low, and like I said, anyone that will be looking to go long from this area, their stop loss will be placed at this low. So this is a swing low. Stop losses are placed at this particular low right here. So it's okay to say that this is your sell side liquidity. Very simple and easy to understand. So same thing goes to this. This is your swing high right here. This high right here is your swing high. And why is this your swing high? Over here we have a high and we have a lower high right here, and we equally have a lower high right here. So this candle that is the high, okay, this particular high right here, this is your swing high. Very easy to identify. This is your swing high, and this is a lower high and a lower high. This is the highest high at this area. So this highest high is your swing high. Why? Anyone that is looking to short from this area, anyone that is looking to go short from this area, their stop loss will be placed at this high. Their stop loss are likely to be placed at this high. It's not guaranteed that their stop loss is at this high, but they are likely going to place their stop loss at this high. So this is your swing high, and what you should know is that this is your buy side liquidity. Liquidity is resting at this area. Okay, liquidity is resting at this area. So this is your buy side liquidity. I hope this alone explains it and you understand exactly what a buy side liquidity is and a sell side liquidity. So understanding the concept of swing high and swing lows will help you understand that this is another type of liquidity, buy side liquidity and a sell side liquidity. So we're going to the price charts right now, so I will show you examples so you understand what I just explained. Remember, I said the stop losses are placed at the high, and at some point price is going to come to sweep this stop loss at this high. That is what you need to understand. And over here the stop losses are placed at the low, and at some point price is going to come to sweep this. Okay, so have that in mind. So let's go to the price chart. Let me show you examples of swing highs and swing lows, which are sell side liquidity and buy side liquidity. So I'll show you how to identify that on the price charts. So I will use this particular chart to explain the more so you have a better understanding. Looking from this area right here, what you can see is that we have this candle with the lowest low. Okay, this candle with the lowest low, and if you look at the left, we have this candle with a higher low, and if you look at the right, we have another candle with the higher low. So this candle right here, it has the lowest point. So this is our swing low, and you should know that this is a sell side liquidity. Liquidity is resting at this particular low right here. So have that in mind. Liquidity is resting there. And if you continue to look, if you see over here, you see we have this candle with the lowest low, and over here this candle has the higher low. This bearish candle is the higher low, and if you look right here, this bullish candle that has momentum, this is another higher low. Okay, another higher low. So you can go ahead and map this out as your sell side liquidity or as your swing low. So like I just said, price will at some point come back to these areas to take out this liquidity resting at the swing points. Okay, so plain price forward, but let me explain quickly, but I have to reduce it because it's too fast. Although price took the liquidity at this area, but what you can actually see from here, before price took it is that this was the higher high, but over here we have a lower high right here, and this was a lower high. So this was the buy side liquidity. This area, it was the buy side liquidity before price took the liquidity resting above that high. Okay, so over here we have another one. This is the highest point, this is the lower high, and this is another lower high, and you should have it in mind that liquidity is resting at this high. This is your swing point. Anyone looking to go short is going to put their stop loss above that particular high. Okay, so playing price forward right now, and what you can clearly see right here is that we have another sell side liquidity over here. You can mark this area out as your sell side liquidity, and you should note that price is going to come to sweep it at some point. And now you see price took this sell side liquidity. You see that price took this, comes take this liquidity pool over here. Now if you look closely, we have this higher high right here, the highest point. We have a lower high, a lower high. So this is another place liquidity is resting. This is your buy side liquidity, and like what I've been explaining, at some point you're going to expect price to take the liquidity at that particular high. Okay, price continues to push to the downside, and over here you see we have another sell side liquidity. Why is this a sell side liquidity? This is the lowest point right here, and here is the higher low, and this one right here, this bullish candle is your higher low. So you can go ahead, map out this out, mark this out. This is the sell side liquidity, and you're going to expect price to come back to this particular area. So playing price forward, you see price wicks above the high. So if you want to take the concept of liquidity sweep, you can see this could be a very good place to trade from, because you see price takes the liquidity at this low. We had liquidity pool right here. You see this was a low and this was another low. Price sweeps that. If you go down to the lower time frame, this will be a very good place to look at, more like a change of character, and you're going to look to map out a lower time frame point of interest. Let's say you have a lower time frame point of interest at this area. You can see price has come, tap into that, and you'll be expecting for price to push to the upside. You're expecting higher prices from here. Okay, very simple and easy. Now price comes back, taps in a little more, and you see, boom, price pushed to the upside. So this is a very simple concept. And if you look right here, we have another low right here. This is our sell side liquidity, and I hope you understand what I said about this, why it's a sell side liquidity. This is your swing low, and if you see, this was a swing high before price takes the liquidity at this particular high. So these are simple concepts you should understand as a trader. Okay, these are simple concepts, and if you look closely, we equally have another buy side liquidity. So you can use this concept and know where price is likely to go, know where you have your liquidity resting and where price is going to go. And you see price takes the liquidity at the high. Okay, price takes that swing high over here, and you see price push to the upside. It takes this particular one, and price is yet to take this one we have right here. So these are simple concepts you should know and encode into your trading style. And if you look closely, we have this swing low right here, and this could equally be your sell side liquidity. Very easy and simple to identify. Let's see how it goes. And from here you see price builds another liquidity over here, and this is more like equal highs. So this is clearly another liquidity type which most people know. This is the most famous one everyone understands and knows about, equal highs and equal lows. Okay, so let's see. And now price sweeps this particular one over here. Price sweeps that liquidity over there, and if you look right here, we see we have another sell side liquidity over here. Price now pushed to the upside, and it took the liquidity above this high. So you can see it clearly. Price spikes, takes the liquidity, and it's pushed to the downside. So you can go ahead and say that we have another sell side liquidity. But what you can see, price took the external range liquidity. This particular one is more like an external range liquidity, and all these are liquidity types. Okay, these are liquidity types which you need to understand. So we have another buy side liquidity over here, and if you look closely at this low, we have liquidity areas which you'll be looking and be waiting for price to take. Okay, so one thing is that you don't really know when price is going to take those liquidity areas, but you should have it in mind that at some point price is going to come back to these areas to take this liquidity that are resting at this area. So playing price forward right now, and now boom, price takes the buy side liquidity, and from what you can see, price is now taking buy side liquidity. Why? The order flow is bullish. You can see price has switched and price is pushing to the upside. So if you look, you see price switched from trending to the downside, and now price is bullish. So now that price is bullish, what you should expect is that price is going to be taking buy side liquidity. Okay, price is going to be taking more of. Okay, it doesn't mean that price is not going to take sell side liquidity. Price is going to be taking your swing highs, because the order flow is bullish. Okay, the order flow is bullish, so price is going to take more of swing highs. Okay, so now we have another swing high right here, so let's see how it goes. And now we have another swing low over here, and price takes the liquidity at the high. So what you can see is that price took the liquidity, pushed to the downside. We have a swing low. Price didn't take that, it pushed to the upside and takes the liquidity at the swing high. So you see, like I just explained, price is now focusing on taking the liquidity at the swing highs. Why? Price is bullish. We are in a bullish market right now, so price will focus more on taking the liquidity at the swing high. So from what you can see, price built another one and it takes it immediately. Okay, price takes the liquidity at this high more like immediately after it was built. So let's see, and a continuation to the upside. Now we have another one right here, liquidity resting at these swing points you've seen right here. Price takes this high right here. Okay, price takes the high, and we have another swing point right here which you can actually call a swing low. This is a swing low and liquidity is resting at this swing low. Right, anyone that is buying at this point, the stop loss is resting at this particular low over here. You see, price takes the liquidity at that low. What you can actually see from here, if you look closely, what you're going to see is that price takes the liquidity at this particular highs right here. You see, price sweeps the liquidity, push to the downside. So if you understand ABC pattern, if you understand ICT's ABC pattern, we see that this is more like a liquidity sweep, a pullback, and we have this fair value gap over here. You see, we have this fair value gap. So if you want to take a trade, this could be a place you could look to go short from. Okay, you could look to go short from this particular area right here. We have this liquidity sweep, price pulls back with this candle, it has momentum, so you could look to take a trade from this fair value gap, and you could target any of this low, could target this low or this low, go for a quick trade, take your quick profit and move away from the market. It's a very simple strategy, and I've taught you guys how to trade that strategy. So from what you can see and what I've been explaining, price is bullish, taking the buy side liquidity. So at some point it's going to switch and take this sell side liquidity. So let's see how it goes. See, price takes the sell side liquidity, and now price returns to the fair value gap. So if you want to take a trade, this could be a very good place to sell from, and your stop loss will be placed above this particular high. Okay, so let's see. You see, now price is pushing to the downside and price is taking the sell side liquidity. You see, the liquidity that was resting at this sell side, price starts to take it. So this is what I've been explaining. Price will always come back to these areas to take liquidity. Okay, price is now taking it at this point, and you see, this was a very good setup if you wanted to take the trade. So I hope this video helped you understand buy side and sell side liquidity, understanding the swing points in the market, understanding where you have your swing high and your swing low. So this is a very simple thing. I said it's going to be a quick one, and I hope you understand exactly what I just explained. If you're new to the channel, consider subscribing to the channel. Thanks very much, and see you in the next one.